Okay, good day. This is Wolverine from Salvation Trading Company. This is a quick training video on the channel break strategy using three simple indicators. And most of the indicators are free from your broker, and the resistance support levels which are purchased from Salvation Trading. Now, this is, again, the channel break entry for the daily channel breaks. All right, now, here's the legal information, so make sure you go through that. And now every day, clients receive a daily report that looks a bit like this, and specifically what we'd be focusing on for the channel break, daily channel breaks, are this section right here, and this section right here. Well, all of this right here. Okay, so, and within this section here, what we're looking at are breakpoints. These are the channels that are likely to be tested and broken during that day. And so this is the first number is the channel break. The second value is your first target, and then the last value is the extension. So it's usually, a buy opportunity, then first target, then extension, and then the same for the sell side. All right. So and then from each direction on the potential move, you'll see that there will be comments that we pay attention to help us guide us into those trades. All right. So and that you'll see those for all of these pairs every day. You get new numbers. All right. So the rest of these report numbers we will follow up in a subsequent training module, and so we'll go through those a little bit. Those are different types of trading methods within the channel break strategy. Now, what we look for in a channel break when you receive those numbers are what we follow these rules of engagement and an exit strategy. Rules of engagement for the daily channel break are fairly simple, really. It is all about trading the 5-minute trend line, all right, and then we make sure that's what we check off. Are we trading with the 5-minute trend, which is a 60 simple moving average line? Then are the cross pairs fueling the trading plan? All right, so for every pair, we know that there's at least 2 cross pairs that will help fuel your pair. Remember, no pair is an island unto itself. And there's more. We have more trading modules and cross pair guides available for clients as well, and we do a training just on cross pairs. And if you go into our conference room that we have 3 times a day, you'll see that we provide training and talk about the cross pairs constantly, because it's so important. It's a critical factor of being successful in trading Forex. And then you would look for the 5-minute MACD and make sure that the 5-minute MACD converges at extremes or testing the neutral line. Now, regarding the 5-minute MACD, I have specific inputs that are optimized for the channel break. And again, those are something that if you sign up for the free trial, 10-day free trial, or become a client, you will receive those inputs for that MACD. Those are critical to understand and get the optimization on movement, on price when it breaks a channel. So then we look for, once we're converged at the extremes or testing the neutral line, then we look for on the 5-minute and the 1-minute MACD fast moving average, are they crossing over the slow moving average? So remember, we're in a 5-minute time frame here. So we want to know on a 5-minute time frame, is our fast moving average crossing over the slow moving average? That will determine momentum. And again, you should have gone through the first training module on the 1-minute MACD, a training module, because then you would understand there are 3 trigger elements, remember, to this fast moving average crossing over. So remember, those trigger elements are convergence, crossover, and divergence. And again, you would need to go to the 1-minute MACD training module to get a full explanation and detail on that. And then we want to make sure that there's no high impact news coming out, typically within 30 or 15 minutes. And so let's take a look at, this is an example of one of the channel break strategies and how we break the channels. And remember, this is because typically the market will run in channels. All right, now on this slide you'll see there's dotted lines. These dotted lines are channels that have already been predetermined. Okay, this is those channels that we show you on the daily. So on this specific daily report, we had a buy opportunity at 55.64, your first target at 55.84, and then your extension at 56.33. Okay, so how do we know when the channel break is ready to break? Following these trigger points. And so when we test 55.64, that's when we go back through our entry-exit guide again. So on the entry guide, it says, first thing it says, are we, do we have, are we, again, trading with the 5-minute trend line? Okay. Yep, the 5-minute. Here's our trend line, the 60 SMA, this orange line, and the 60 SMA is in this case moving long. So we are trading with the 5-minute trend line. Trend line's moving long. Okay, so we have that confirmed. Secondly, the second question is, are the cross pairs fueling our trading plan? And in this case, yes, we do have cross pairs here that you can't see on this chart, but in this case, we also have the euro dollar moving long. The euro dollar moving long will help fuel the cable moving long. And then is the 5-minute MACD crossing the fast-moving average crossing the slow-moving average. Now, in this case, here's the MACD down below here, and this is moving average, convergence, and divergence. So what we're looking for is the fast-moving average, which is my red line. Okay, red line here is my fast-moving average. The green line is the slow-moving average. So in this case, we're looking for, remember, those 3 trigger elements. Again, you have to go through that 1-minute MACD training to get a full understanding of them, and see how they work. But with the inputs that I provide, you'll see those 3 trigger elements that will take place. Again, we are testing right the neutral line. Right? That's one of the checklists. We're testing the neutral line, so we could check that off. Fast-moving average is converged. We have convergence, so 2 lines are pinched, so we have the convergence. And we have the crossover. Fast-moving average has crossed over the slow-moving average to the long side. So, and we're starting to get divergence. You can see divergence on a 2-line system when you have the divergence, the separation between the lines, or you can watch your histogram grow and develop these mountains or these hills. So we have divergence. So, and we are testing the trigger number at 55.84 right here. Right here's the trigger. Right here's the trigger level, trigger number. Now you would ask, okay, well, why is this a good trade opportunity when these 2 areas are also testing the trigger number, but we didn't take the trade at that point? Well, all about the rules of engagement. Again, are we at these levels? What are our MACD lines doing? Well, when we're testing the trigger number here, MACD lines are already at upper extremes. So if you wanted to go long, you'd want the MACD lines to be down at lower extremes. You would want these lines to be moving down here and then coming back up. But that's not the case. In this case, they are moving down here. So if they're shorting, you don't want to try. This is all about short-term momentum. So you're not going to want to move long here when the MACD lines are moving down. Similar here again, when we test the trigger number here, again, MACD lines, we have the fast-moving average already starting to cut underneath the slow-moving average to the short side. So in that case, you're just not, that's why we go through that checklist, because you're not going to get, likely not going to get the momentum for price to break. So now, in this opportunity here, though, we're meeting all the requirements. Okay, again, our 5-minute trend lines moving long, our MACD lines have converged, diverged, converged, crossed over, and diverged long. And so it looks like the MACD lines are going to start moving long here, and that momentum is what's going to help pull price right up through the trigger number at 55.64. Okay, so that's the rules of engagement of entering. So once we have that established, we look at our exit strategy. Our exit strategy here is to look at your first target. I recommend taking off 2/3 of your position, or about 70% of your position. So at first target is always designed to give 20 to 25 pips. So in this case, we come up to our first position here, our first target, and we take 70% off at 55.84, move our stop to +1. Now the reason we do that is because we want to protect our capital. Remember, we know there's two basic elements that controls the market, right? And that is fear and greed. Sorry for the poor spelling. So fear and greed. And so what we want to get rid of first is the fear. And by covering our first target, and doing that by moving our stop to +1, we have now guaranteed ourselves of being in a winning trade at capturing that first 20 pips. And now we can also at this point we can set our limit to our remaining limit to the extension, and move if our stop's already at +1 on the last position. At this point, you can actually walk away from the trade. So the channel break is also very ideal for people who want to scalp. It's a scalping opportunity, but still gives you opportunity to gain more out of your scalp if the extension can be achieved. In this case, MACD lines continue to move long and diverge long. We're still getting that separation between these two, the fast-moving average and slow-moving average. And you can see that continued to pull price up and pull price right up to our upper extension at 56.33. At this point, you would take the remaining off of your position off at 56.33, and there you have your 69 pips altogether with that. So it's a really easy way to learn how to scalp, to catch the momentum using the MACD lines, which is a free indicator from your broker, using your 60 SMA line, which is a free indicator from your broker as well. And you can see what we're doing here is looking at breaking these channels. We know we broke this channel at 66.24, and we're coming up to another channel up at upper level here at 66.38. So just breaking it, going, and we're just moving up into these channels, and because that's how the market runs in channels, and we're just taking advantage of that and scalping it up. It's a quick, simple trade, and this is something that you can learn more from if you go to our website at www.salvationtrading.com. I am Wolverine, and I will provide training. We do have a 10-day free trial. If you'd like to get involved in that, just fill out the questionnaire, and I'll be happy to provide that for you. And we do have conferences every day. First 2 hours of every market session, we have conferences that you'll be invited to. We also do training during that time. I also talk about the setups and take live trades. You'll find on the website there are also a follow-up screenshots from live trades and some videos on live trades taken. So please feel free to take a look at those. And again, go to www.salvationtrading.com, and you can and look for more information. Be really glad to work with you. And remember, our motto here is to trade smart, not often. All right. Thank you again for your time. Appreciate it. And God bless and good luck. Safe trading.